Welcome back to analysis of Gold XAUUSD. Thanks for joining me here. My name is Vic. Let's first see what has been happening across the structure, across the time frames. Okay, so because that gives us a better idea. Majority of the traders, what they do is they're trying to focus on one little thing, one candle or one day or one little movement. Okay, but that is where the problem is. In trading, you must have a context, right? What is the market is telling you, and that comes from higher time frame and overall structure. So let's look at the structure once again. This is not going to be comprehensive analysis. If you are interested in finding out exactly multi-month or multi-year analysis, I've already covered that few times in recent past as well. So go and check out on the channel. They are available there. But let's just focus on this particular part. What has been happening now? What you can see is that market has fallen down. Okay, then it went up. Okay, in this process, what was happening? It was actually just it was a bearish movement here. Then it fell down to this level and it created a double bottom. Now, when you have a double bottom or double top, those sort of thing, this becomes a high liquidity area because majority of the traders think that this is a strong support or resistance, and they place their stop losses. So there is a lot of liquidity around here. So, and gold can actually come down to 1680 or even lower than that to grab that liquidity. So you should be aware of that. That's one thing. Now, has anything changed after that? Yes, the market has actually was in bearish trend. Then it went to kind of sideways movement. So overall in the structure, if you see, this is nothing but a sideways movement which is happening on monthly or weekly basis. Okay. Now within this structure, there have been few other smaller structures. So market fell down, went up, fell down, okay, went up, and it failed to go and create a lower low, which means that market went, if it was bearish, now it went to consolidation. Now when it went to consolidation, what happened? It turned into bullish as well. So what happened here? The market fell down, went up, fell down, now went up. So if you pay attention to this part, this is basically a bullish movement. Market is falling down to the same kind of channel level, and it went up. Now when this sort of thing happens, it usually goes to the mid of the channel first and then tries to go back up. Okay, so this level, which is around 1830 level currently, is very very important, because if that is broken, then market can go up to 1850 or something. And if this level is broken as well, which is around 1880, or actually a little lower than that, as you can see on the chart. If it goes if it goes above that, then we will have a W pattern like this, and it can obviously go beyond close to 1900 or even beyond. And if it goes beyond this, then we will have a bigger W pattern, which will be something like this. It goes into 1940 something, or even higher than that. And if that is also broken, if this level of 1960 is broken, then we have even bigger W pattern, which can put us back into 22,000 or even higher than that. Okay, so this is the bullish scenario, and this is how you should read one step at a time. Okay, so you cannot just say that the market is obviously going to go to 2000 straight away. It may or may not happen like that, right? So this is how we read. So these levels, all of these levels, and there are sub levels which are more important, and we must make use of them as support and resistance. Okay, now on the bearish side of things, that was the bullish scenario, because the market can do anything, right? After a while, market conditions can change, and gold can start to go into bearish mode. Right now this is simply going into consolidation right now, and it is expected to break out at some point in time. Now which way is going to be? It's going to be this way or this way. You cannot tell until it actually reaches that point, or it's very close to that point. Okay, so that's what we have. Now on the bearish side of things, right now what we have is something like this. The market has gone up, now we've fallen down, we went up. And if the market comes back down and breaks this point, then we are looking for further movement down into 1730, or even slightly higher than that, something like that. And if this level is also broken, which is 1730 or so, okay, then we have a bigger M pattern, okay, which will bring us to 1680 or even lower than that. Remember the liquidity, right? It can come down here and then start to go back up. because there is a lot of liquidity there. Okay, if let's say for assume, like let's assume that the market stays below this 1680, or maybe it went up a little bit and then came back down, then you will notice that we will have a bigger M pattern, which can put us into 1580 to 1550 level, somewhere around here. We'll have to see, like when it approaches this, then we can find out where it is going to go to. So these are all the scenarios that we have, and I posted this already on TradingView and other social media channels. So if you're not following me here, you should do that, because I post a lot of updates and new ideas here. Today I posted about corn futures as well, dollar index. So this is the gold one. I also posted a silver one here, okay, which is here. So on gold, these are all the scenarios that I have pointed out, right? And if you read, you can see what I'm saying here. This is the current price. If it breaks above 1830 area, then it is expected to reach 1849 or 1852. So that's this area. That's why this is very important resistance level. So let's go back to the chart again and bring in original analysis. So, and if I go to the daily time frame and reset this entire thing, okay, this is a very important area here. This is the 1830 level. As you can see, this is 1820 to 1828 to 1830. We found this FCP zone few weeks ago, and market fell down at the start of the new year very nicely. It gave us a very good trade. Now we went to 1782. We went long from here, okay, and then we were expecting last week. We were expecting it to go either reverse, have a little bit of correction from 1812, or go straight into 1820 FCP zone. So this was a very good FCP zone. It fell down a little bit. It gave us a little short opportunity, but that did not come out to be very good one, because we were expecting even further movement down. That did not happen. Okay, so let me actually clean this up and show you what we can expect now. So we had this FCP zone. It gave us a little bit of short opportunity as a day trade. There was a little bit of scalp on this smaller FCP zone as well. Let me remove that as well now. So that's gone. Now, market went back into this major 1830 FCP zone, which has been there for some time. So this is how it is looking. Okay. Now, as you can tell, it is simply a sideways movement. Okay. Right now, this is going into sideways. So the question is whether it is going to break out or not. Okay. And to which side? So market fell down to this level, went up. Now if it breaks above this 1830 level, then we know that these smaller levels, 1835, 1837, 1839, these can be liquidity grab area. What I mean by that is the market has created double top or triple top sort of thing now. Okay, which means that market can go back up, collect all the stop losses around these areas and fall back down. So you have to be careful with that. However, if market and goes beyond these levels, give me just 1 second. If the market goes beyond these levels, then obviously, as we said, market is going to come to 1850 level. If that is also broken, then we are looking for 1861. Then we have 1873, where a gap is also available. And in that process, you will notice we will have this sort of W pattern, which we have just talked about. But for that to happen, it needs to go and break out of this 1830 level. Okay, if it continues to fall down, then remember, this is what we were talking about, this M pattern. Okay, so the whole thing, the whole range is right now is between this, and this is kind of like sideways movement, right? Now let's go to the smaller time frame and show you what we can actually do about this. Okay, so we had a W pattern here. Okay, and if I draw Fibonacci from, give me just 1 second. If I draw Fibonacci from here to here, okay, so far, okay, I'm expecting market to come to this level of 1812. Okay, if it does not come there, okay, and if it does not break through this, okay, first of all, it needs to come to near about 1812 or 1811 or something like that. If it comes there, then there can be a push to the upside, because this is still kind of support zone. As you can see, there is again a minor consolidation running here, right? So it's a sideways channel again running. So if it comes to the bottom of this channel, they can be pushed to the upside. Okay, on smaller time frame, we already have an M pattern, so which means that market is expected to go higher. So that tells me that as soon as the market opens, there can be a very good day trade or like a scalp opportunity, which can actually push the market up. So something like this. This is an M pattern. So market is can come back down, create a double bottom sort of thing, and then go back up. Okay, so that is a possibility because we have an M pattern. Okay, if it fails to do that, if it comes down to 1812, 1811, then also we can expect a minor movement upwards. Okay, remember 1806 has been a very good area, right? This can still push the price back down in here. Okay, so just watch out, like how it actually opens on like this week, and then you probably will grab a little bit of movement to the upside. Okay, but make sure that you are reading all of these levels one at a time. All of these levels can act as support and resistance. So if the market starts to go up, this zone will still act as resistance. If it goes beyond this, then these levels will act as resistance. Market can still fall down. If the market is going down, then these can act as resistance. All of these levels can act as resistance. Okay, but overall, my bias is still bearish. I will only change my my bias to the bullish on higher time frame if it goes and closes beyond 1870, this previous structure. Okay, that will be on a higher time frame. On a smaller time frame, I can be bullish if the market actually goes above this FCP zone and clears these three levels: 1835, 1837, 1839. Then only it will go into bullish mode. Okay, until then, maybe I can go for a little bit of like day trade or scalp on a bullish side, but I will still be preferring my shorts. Okay, this again, this area is very important. This can market can actually come there, and that's where VRFCP zone is. Another area to watch out for is this one. This has not been cleaned up yet. Okay, so make sure that you have these two areas marked on your chart. Let me put this one on here as well. Okay, this area and this area, these need to be cleaned up at some point in time. Okay, so this is what we have on gold. If you enjoyed this analysis, make sure to hit the like button, subscribe to the channel, and share it with other traders and trading communities. And have a great trading week next week. All right.